Credit cards are everywhere. They offer convenience and rewards, but they can also lead to debt. Are they a helpful tool or a financial trap? The answer depends on you. It depends on your spending habits. It also depends on your ability to manage your money. In this essay, we will explore the pros and cons of credit cards. We will separate myths from facts. We will help you decide if credit cards are right for you. Remember, understanding how credit cards work is crucial. This knowledge will help you make informed financial decisions. Let's dive in. Credit cards offer undeniable convenience. They are widely accepted. You can use them for online purchases, travel bookings, and everyday expenses. Credit cards also come with enticing rewards. You can earn cash back, airline miles, or points towards merchandise. These perks can save you money if used wisely. Another benefit is building credit. Using a credit card responsibly helps establish a positive credit history. This is essential for obtaining loans, renting an apartment, or even securing a job. However, it's crucial to remember that these benefits come with a cost. Understanding the downsides is essential before swiping your card. The most significant drawback of credit cards is high interest rates. These rates can be particularly burdensome if you don't pay off your balance in full each month. When you carry a balance, interest charges can quickly accumulate, making it harder to pay down your debt. This can lead to a cycle of debt that is difficult to escape. The more you owe, the more interest you accrue, creating a snowball effect. Credit cards can also tempt you to overspend. The convenience of swiping a card can make it easy to buy things you don't really need. Since you're not spending physical cash, it's easy to lose track of your expenses. This can lead to a false sense of financial security. This can lead to a larger balance than you can afford to repay, putting you in a precarious financial situation. Additionally, credit cards often come with various fees. These fees can be hidden in the fine print and catch you by surprise. These can include annual fees, late payment fees, and balance transfer fees. Each of these fees can add up quickly. These fees can add up and eat into any rewards you might earn. What seems like a good deal at first can turn into a financial burden. It's crucial to be aware of these downsides and use credit cards responsibly to avoid falling into debt. Understanding the terms and conditions can help you make better financial decisions. There are many myths surrounding credit cards. Let's debunk some common ones. Myth: carrying a balance helps your credit score. Fact: this is false. Paying your balance in full each month is the best way to build credit. Myth: you need multiple credit cards to improve your credit score. Fact: having one or two cards is sufficient. Too many cards can actually hurt your score. Myth: rewards programs are always beneficial. Fact: only if you pay your balance in full. Otherwise, interest charges will negate any rewards you earn. Understanding the truth about credit cards is essential to avoid making costly mistakes. Section 5. Are credit cards right for you? Deciding if credit cards are right for you requires careful consideration of your financial situation and habits. Credit cards can be a useful financial tool, but they can also lead to significant debt if not managed properly. Firstly, assess your spending habits. Take a close look at how you spend your money on a daily, weekly, and monthly basis. Are you an impulsive spender, or do you stick to a budget? Understanding your spending behavior is crucial in determining if you can handle the responsibility of a credit card. If you tend to overspend, credit cards might not be the best option. They can tempt you to buy things you don't need, leading to financial stress. Secondly, evaluate your ability to pay balances in full and on time. This is essential to avoid interest charges and late fees. If you can't commit to this, you risk falling into debt. Late payments can also negatively impact your credit score, making it harder to get loans in the future. Thirdly, Consider your financial goals. Think about what you want to achieve financially in the short and long term. Are you saving for a down payment on a house or planning for retirement? Your financial goals should guide your decision on whether to use credit cards. High-interest credit card debt can derail your financial goals. It can eat into your savings and make it harder to achieve your objectives. Finally, assess your emergency fund. Having a solid emergency fund can provide a financial cushion in times of need. Do you have enough savings to cover unexpected expenses? Medical bills, car repairs, and other emergencies can arise at any time. If not, relying on credit cards for emergencies can worsen your financial situation. It's important to have a plan in place to handle unexpected costs without falling into debt. Section 6. Using credit cards responsibly. Tips for smart spending. If you decide to use credit cards, it's crucial to do so responsibly. Here are some tips. Always pay your balance in full by the due date. This will help you avoid interest charges and late fees. Set spending limits for yourself and track your expenses closely. Avoid using credit cards for impulse purchases. Utilize rewards programs strategically. Choose cards that offer rewards aligned with your spending habits. Remember, credit cards are a tool. Use them wisely to avoid financial pitfalls. Section 7. Exploring alternatives. Debit cards, secured cards, and budgeting tools. If you're not comfortable with credit cards or want to explore other options, several alternatives exist. Debit cards are a great alternative. They allow you to make purchases using funds directly from your checking account. This helps you stay within your budget and avoid debt. Secured credit cards are an excellent option for building credit. These cards require a security deposit, which typically becomes your credit limit. Budgeting apps can also be incredibly helpful. These apps can track your spending, create budgets, and help you save money. Consider these alternatives to find the best fit for your needs and financial goals. Section 8. The verdict. Credit cards. A useful tool or a financial burden? So, are credit cards worth it, or a financial trap? This is a question that many people grapple with as they navigate their personal finances. The answer, as with many things in personal finance, is it depends. It depends on your spending habits, your financial discipline, and your understanding of how credit works. Credit cards offer undeniable convenience, potential rewards, and the opportunity to build credit. They can be a powerful tool for managing your finances if used correctly. However, they also come with the risk of high interest rates, overspending, and accumulating debt. The ease of swiping a card can sometimes lead to spending beyond your means. If you are a disciplined spender who pays your balances in full and on time, credit cards can be a valuable tool. They can help you earn rewards such as cash back or travel points and build a positive credit history. They can provide convenience, rewards, and help you build a positive credit history. This can be particularly beneficial when you need to take out a loan or mortgage in the future. However, if you struggle with impulse control, overspending, or managing your finances, credit cards can quickly become a financial burden. The temptation to buy now and pay later can lead to significant debt. The temptation of easy credit can lead to a cycle of debt that is difficult to escape. High interest rates can make it challenging to pay off balances, leading to a situation where you are only paying the minimum amount due each month. Ultimately, the decision of whether or not to use credit cards is a personal one. It requires a careful assessment of your financial habits and goals. Carefully weigh the pros and cons, assess your financial situation and spending habits, and make an informed decision that aligns with your financial goals. Consider whether the benefits of using a credit card outweigh the potential risks. Remember, there are alternatives to credit cards, such as debit cards, cash, and other financial tools. The most important thing is to manage your money responsibly and avoid falling into unnecessary debt. By understanding your financial habits and making informed choices, you can use credit cards to your advantage without falling into the trap of debt.